Louisiana auto insurance rates continue to rise, putting a financial strain on hundreds of thousands of drivers. The latest rate hikes include the state's largest auto insurer, State Farm, impacting approximately 1 million drivers. Louisiana currently ranks second in the nation, only behind Florida, for the highest car insurance premiums. Here's a look at what's driving the rate hikes and solutions to put the brakes on premium hikes.
Nicole Fontenot is a working parent in a 2-income household, insuring 5 drivers and 5 vehicles. She was surprised to discover on her latest auto insurance bill from Progressive a $95 increase in her monthly premium.
Our mortgage runs around $1,150 a month, and our car insurance is $1,407, and so we are paying more for car insurance than we are paying for our mortgage and our homeowner's insurance together.
Progressive is one on a long list of auto insurance companies raising rates on Louisiana drivers. The top 5 auto insurers in the state that received approval to raise rates include State Farm, the largest insurer of Louisiana drivers, with a 17.3% rate hike, and USAA Group with the highest rate hike at 33.8%.
Without any warning, or really without any reason, we have had no accidents, no tickets, no incidences that would cause a usual rate hike, something that you would expect to cause a rate hike. It was just an increase in the bill unexpectedly. It's the constant unexpected nature to the increases that come with insurance. But when there's really repetitive increases and for no reason that you can't plan for, that you may even be unaware of, you can't budget for things like that.
So the only real way to control rates is competition, and that competition will do what it can if the system isn't skewed against them to control rates. Politically, we can't just say no. That won't work. Companies don't have to be here.
Louisiana's Insurance Commissioner Jim Donnellan's team of actuaries reviews and recommends either the rejection, adjustment, or approval of auto insurance rate hikes. Insurance companies don't have a rate hike cap nor a limit on the number of times they can ask for insurance premium increases.
The next obvious question is, why grant them?
Because to just say no is to tell them, go somewhere else.
The rising cost of auto repairs on new cars with more technology and pricier parts, that's one of the contributing factors. Another, the many drivers opting to carry only the minimum coverage required by law.
Bad roads, distracted driving, the other factors are not major contributors to the cost. Litigation is, and we have a set of laws that enable folks to take advantage of the system by taking a minor accident into litigation.
It's no secret that Louisiana is a sue-happy state, with a large amount of litigation tied to car wrecks. For years, state lawmakers have attempted tort reform, aimed at putting guardrails on personal injury lawsuits. In Louisiana, if your case is valued at $10,000 or higher, a judge rather than a jury will decide it. It's referred to as a jury threshold. In 2020, a law aimed at reducing frivolous lawsuits lowered the jury threshold from $50,000 to $10,000 in claims value.
Every year since tort reform passed in 2020, auto insurance rates have climbed. The continued pointing towards tort reform are insurance industry talking points that are used to distract Louisiana drivers from the real problem that's driving up their auto insurance rates, which is the way that insurance companies set these rates.
Consumer advocacy groups say the root cause of Louisiana's rising auto insurance rates is that credit scores are tied to insurance premiums.
Louisiana ranks second to last in average credit score, and we have the second highest auto insurance rates in the country. When you consider those two facts together, Louisiana drivers with bad credit but a good driving record will pay 111% more than a driver with good credit and a good driving record. That's the reason we're paying so much for automobile insurance here in Louisiana.
Bad credit can drive up auto insurance rates regardless of a good driving record.
In Louisiana, if you are a safe driver with a safe driving record, and you have poor credit, you will pay $905 more for automobile insurance than a driver with a DWI and good credit. Totally unrelated to either, their rates are totally unrelated to their actual driving record and the risk that they pose to the insurance company or to the general public.
The end result is a self-perpetuating cycle. Unaffordable auto insurance rates create more uninsured motorists, which produce a higher monetary risk for insurers and insured motorists, all of it laying fertile ground for more litigation. Prohibiting the use of credit scores and setting rates for Louisiana drivers, some say that will help drive down rates.
This is a price-setting practice that is particularly difficult for low-income families. And once you start to have more uninsured motorists, the cost of insurance goes up, which makes it more cost prohibitive for more people, and it's a death spiral from there.
Nicole offers up another rate reduction solution. Reward responsible drivers. She pays for auto insurance for 2 adult children in graduate school with good grades and good driving records. Why not offer rate discounts instead of driving away future generations who can't, quite literally, afford to drive in Louisiana?
You know, you hear from legislature, politicians, they want to keep the best and brightest students in the state when they graduate from any college within the state. I can't blame them for leaving. We have told our kids, don't stay here for us. We'll come to y'all. But if there's a better opportunity and you can afford to live somewhere that gives you more for what you have to pay, we'll find you, and y'all leave.
That is a very powerful statement from a parent.